Okay, now double entry system. What is double? Now, double directly right. A N S W answer of H U U S T L. Now, accounting terms, account payable, account owned by the business to a supplier for the good and service received on credit. Capital, the total amount of money invested by the owner to the or the shareholder in the business. It represents the equity ownership in the company. Uh, Liability of financial obligation or the debt owned by the business to outside the party creditors. Journal entry about office equipment for cash of NPR 10,000, debt office equipment assist NPR 10,000, credit cash assist 10,000, received cash from the customer on account NPR 7,000, debt cash assist 7,000, credit account payable NPR 7,000, paid rent on the month of 3,000, debt rent expenses NPR 3,000, credit cash assist NPR 3,000, sold goods worth of 12,000 on the credit to the customer, debit account receivable assist NPR 12,000, credit sales revenue NPR 12,000. Now here is trial balance, laser preparation, receipt from the customer, account receivable 10,000, rent paid, rent expenses 3,000, paid salary 4,000, sales account sold on credit account payable 15,000, sold for cash 5,000, and then trial balance of the first March cash 20,000, account payable 12,000, capital 40,000, sales 50,000, purchase 30,000, rent expenses also 30,000, then 3,000, salary expenses 5,000, total 75,000, 90,000. Now profit and loss statement, net profit calculation, sales 75,000, purchase 40,000, 75,000 minus 40,000, 35,000, expenses, salary, rent, office expenses, total expenses, net profit 35,000 minus 18,000, depreciation calculation, 1 lakh minus 10,000, this one. And then rectification error, sales of NPR 20,000, record date of NPR 20,000, correcting debt sales ratio NPR 18,000, account receivable assist 18,000, a purchase of NPR 3,000 was omitted from the books, correcting entry, debit purchase expenses NPR 3,000, credit account payable liability of NPR 3,000, cash paid to the creditors, correcting entry, account payable liabilities NPR 1,000, credit cash assist NPR 1,000, bank reconciliation statement, balance as per bank statement 50,000, it deposit not recorded in the cash 3,000, bank charges 500, less outstanding check 5,000, corrected bank balance 50,000 plus 3,000 minus 500 minus 50,000, 47,500. Balance as per cash book 45,000. Adjusted balance 47,500. Final thought, sales 1 lakh, purchase 60,000, gross profit, sales minus purchase, closing stock 20,000, profit and loss account 40,000, expenses rent 5,000, salary 10,000, interest 2,000, total expenses 5,000, 10,000, 2,000, 17,000, net profit 4,000, 17,000. Cash book feature and purpose of the cash book. Cash book is used to record all the cash receipt and the payment, including the bank transaction. It helps to maintain the clear record of the cash and the movement while preparing the cash flow. Now, types of cash book: single column cash book, record by only the transaction; double column, record both transaction and the bank transaction; triple column, record cash, bank, and discount transactions; sales and purchase book. Sales book or journal is also used to read all the credit sales transaction. Purchase book, accounting equation, assist is equal to liabilities plus equity. Adjustment in the financial account, closing of the stock adjustment, prepaid account. Adjustment now adjustment in the financial account, closing stock adjustment, prepaid expenses, outstanding expenses also now move down. Depreciation on basis, depreciation method, single straight line depreciation is charged equally over the life of the assist. Reducing balance method, depreciation is charged based on the reducing balance of the assist. Error in account, error in the omission following the record of transaction, error of the commission posting a transaction in the wrong account, error of the principal, misapplication of the accounting principle. Also financial statement, statement shows the company performance over the period, time, revenue, expenses, and profit. Balance sheet shows the financial position of the company, assets, liabilities, and equity. Cash flow equipment, equity shows the cash inflow and outflow from the operating, invoicing, and financing activity. Provision and reserve, provision amount set aside to the public, specific liabilities to expenses that are uncertain. Reserve fund set aside for a specific future purpose such as expansion and the further losses. Receivable and the payable account, receivable amount earned by the customer to the business, account payable amount to the business earned to the creditors. Statement of the cash flow, a statement of the cash flow report the cash inflow and outflow from the operating, investing, and financing activity. It helps to evaluate the liquidity and cash position of the business. Double entry system, in the double entry system, every transaction effect and one is debited and another one is credited.